speak now. I've been working, for the ones I haven't met yet, I'm Juliana Santiago. I'm a former alumnus from the University of Florida. I graduated last year as a master in the Master of Latin American Studies, and I had two certifications. One was in tropical conservation and development at the TCD program, and the other one was in the sustainable development practice. For the ones that do not know, the MDP program, they also provide a certification. And because my work and my research was so connected to development, at the end I could match the two interests. So it was an amazing period, and I really miss my time there. And after I graduated, I started working for this initiative. I started working for Emergent. You can see the sign on the right-hand side on the bottom. Emergent is a nonprofit organization that is responsible for coordinating the LEAF Coalition, and I will speak a little bit more about the LEAF Coalition today as well. But first I would like to contextualize how the LEAF Coalition was created, but in the context of REDD+. So REDD+ has many meanings, but one of the specific meanings of REDD+ is how it's called this financial instruments that has been created to raise funds based on payment for results in reducing emissions from deforestation and forest degradation. One of the first instruments that was created in this mechanism of presenting results in reducing deforestation and then being eligible to raise funds from other countries to as a reward for these results, and also with the intention of reinvest these results in further actions related to conservation and sustainable development of forest regions, etc., was the Amazon Fund. So Brazil had, in some sense, it's considered was a protagonist, and also brought this innovative mechanism that really shift from the traditional ODA that used to finance projects, and the projects and the investments would be done, and then the results would be measured, shifting the logic to having the proponent, in this case, Brazil as a country, present the results and then being paid for these results, kind of the pay for an utility service. You have the measure of how much you consumed as utility, and then you receive the payment. And actually, this model is the one that was consolidated in the UN FCCC discussions, and particularly the REDD+ framework, known as the Warsaw Framework in 2013, that was agreed in 2013. And even prior to that, of course, other initiatives have arisen, such as the REDD Early Movers and many other bilateral cooperation. Later on, the framework was ratified in the Paris Agreement. And in 2019, actually before that, in 2019, this is a graphic I used for Brazil, but before that, the Green Climate Fund was created, and a specific amount was assigned to support REDD+ initiatives. And then in 2001, right after the challenging period of the pandemic, the LEAF Coalition was launched. It was launched, if you might remember, some of you, during the Leaders Climate Summit that US President Biden hosted. And it has to be considered also in the geopolitical perspective. At that time, we had a transition in politics in US, an important transition. The President Biden wanted to send a signal of bringing the U.S. back to the Paris Agreement, and because of that, he convened many leaders from various countries, pushing these countries and these leaders to make a stronger and more ambitious commitment to COP26. So that was the motto for the event, and at that time, the LEAF Coalition was launched. And what is the LEAF coalition for the ones that do not know? So so REDD+, we also have to understand the LEAF coalition, considering the history of REDD+. Although the idea of raising funds based on results achieved was a significant innovation, still we have not seen enough funds being mobilized to forest protection. So the challenge of countries that have forests in their territories are many, as we know, in terms of development challenges, social challenges. And so the budget that these countries have been investing to reduce deforestation, to conserve the forest, to provide all the social and public services necessary for the people that lives in the region that usually are in a very social vulnerability, it is a lot. And the money that was raised based on the results of these efforts from these countries have not been enough. And this is one of the criticisms that REDD+ has not been successful. And what is missing there? More mobilization of funds. So the idea that started to be discussed also as part of the convention and the COP discussions was to focus on how a carbon market could be created to bring funding coming from corporates, from the private sector, to also invest in climate action activities. At that time, forest was not really being that much of a focus, but as the discussions move forward, and because of all the reports from the IPCC and etc., of the importance of forests, and even of the risk of not involving and looking for forests to reach the 1.5 Celsius limit in terms of global warming, the forest became an important discussion in the carbon market agenda. So the LEAF coalition has this intention of leveraging and bringing this new actor that is the private sector and channel funds to forests in the same logic of the REDD+, paying for the results that were achieved, but taking into account how much carbon is being paid and how to avoid for example, double counting of carbons, and how really to create these markets and bring more companies. And I will speak a little bit about the perspective of these companies in being part of the LEAF coalition or in being part of the voluntary carbon market. But just in terms of history, in the climate summit, at that time, there were like 8 companies in 3 countries that launched the coalition with the ambition of engaging more companies, and in COP26 announced at least $1 billion of pledges coming from these corporates. And this commitment was achieved. Today, there are a little bit of 25 companies that are part of the LEAF coalition, and the amount committed is close to 1.5 billion at this time, and some other companies that has not been formalized their engagement are not included, but the tendency is that this amount will increase. In terms of what the LEAF coalition tries to bring is as a difference is that these companies together, they will mobilize, they tend to mobilize financing scale. They agree to pay at least $10 per ton of carbon dioxide equivalent. That was the emission reductions that were measured by an independent and certified by an independent methodology that is hosted by the Arts Secretary, and the methodology is called TREES, the REDD+ strategy standard. And also, and the $10 was a signal, because historically all these REDD+ bilateral cooperation have been paying $5 per ton of carbon dioxide equivalent. So the LEAF coalition wanted to send a sign that they would pay at least twice the price that historically has been paid. And it also assumed the commitment to buy future results. So the commitment that the LEAF Coalition created is that any emission reductions that happen between 2022 to 2026 are the ones that we want to buy. And the R3's methodology was also selected not only because it has the most recent and criteria to ensure integrity of the carbon credits, but also because it incorporates the negotiations that happen in the UNFCCC and are included in the Varsal framework, such as the Cancun safeguards and the need to have engagement with multiple stakeholders such as indigenous peoples and local communities, what is called IPLC groups. So next, let me change to next. Yes. So looking for the private sector, like one of the risks, and I had this conclusion in my thesis, because my thesis, I talked about the history of the Amazon Fund embedded in Brazilian public policies and what was coming next. And I have a specific mention about the LEAF Coalition and other initiatives that were rising at the time. And one of the concerns that we all have in this agenda, and particularly when we look for the carbon market, is greenwashing. So one of the key elements, the key requirements for the companies to be part of the LEAF Coalition, first is that they have to have an inventory of their greenhouse gas emissions following the GHG protocol in all 3 scopes, and then have commitments, formal and transparent commitments with mid-century net zero targets, is covering these 3 scopes. These commitments have to be have to follow the science-based methodologies such as the SBTI. Also, these companies have to commit to the UN Race to Zero, and they have to report why they are engaging in the carbon market and why they are using the emission reductions. So some companies are regulated. They have obligations to offset their emissions. For example, airlines. Airlines are regulated under an initiative or an agreement that's called CORSIA, and they have some, because they are their business are significant related to fossil fuel consumption. They have some obligations to purchase carbon offsets to neutralize at least part of their emissions in the regulatory framework they are included. But some other companies do not have these requirements. So that's why we call these a voluntary carbon market. These companies, they, in their trajectory to net zero, so when they commit, let's say that I will become net zero in 2040, in their trajectory, that is the gray bars here, they still issue emissions above their targets, because they have to implement many in fact, they have to do many investments in technology and also even change their suppliers sometimes, depending on the scopes they are analyzing. So in this trajectory, beyond their investment to reach their commitments, they agree that they will purchase carbon credits, emission reductions, to neutralize the emissions that they were not able to do in their path to net zero. So that's what is the green bar here. And this is the opportunity that was seen as to channel funds to forest countries or subnational governments that have proved that they contributed to deforestation reduction. So these companies would neutralize their emission by channeling the funds to these countries, and they would be able to declare that they had they paid for the emissions that they were not able to neutralize at this time. So that's the essence and the concept behind the voluntary carbon market. They are doing this in a voluntary manner. Some companies might not, but some are in the voluntary carbon market, and they channel the funds for the emissions that they were not able to to neutralize at this time. And at the same time that the LEAF coalition was launched, so the demand signal came, the LEAF coalition also wanted to see if countries or subnational governments would be interested in advance in conversations and dialogue and negotiations with the LEAF coalition to potentially transact these emission reductions. So the LEAF coalition received 35, it launched a global call for proposal in April of 2021, the same time of when the coalition was launched. And it received 35 proposals coming from all over the globe that went through a technical assessment panel, an assessment from this independent technical panel, and 23 jurisdictions were considered eligible to continue in the engagement and discussions with the LEAF coalition. Looking for Brazil, where I work more, specifically with the Brazilian territory, almost all the states except one of the legal Amazon, the Amazon region, applied for the coalition. So the 8 of the 9 states, except Rondônia, have applied and had been declared eligible by this technical committee. So this is when it started, these conversations between, and Emergent has a significant role on that, is really to facilitate this discussion of these potential buyers, and in some sense we consolidate this demand, and also discuss with the potential suppliers, the potential carbon generators, to seeking to sign future agreements and channel these funds to the forest. And one thing that is also innovative about the LEAF coalition is that it created 4 pathways to transact. So the first pathway is very similar to the traditional REDD+ initiatives that we know, such as the Amazon Fund, the Red Early Movers. The sovereign purchasers, the countries such as Norway, UK, and US, they will pay for results. They will, the jurisdiction will issue their emission reductions through R3s, and the sovereign purchasers will transfer the money, similar to a grant, and the results will count to the forest countries NDC. The pathway 2, 3, and 4 is when the private sectors come in. The pathway 2 is exactly the same as the pathway 1. It's just that the purchaser is a private sector, is a corporate. And pathway 3 is when the innovation comes and then the carbon title exists, the carbon credit is issued. So in pathway 3, there is an issuance of a title that is equivalent to the amount of carbon or emission reduction that happened, and this title can either be used immediately can be claimed immediately by the purchase buyer, or the private buyer can hold it in its assets and use the credit in the future. So going back to the other slide, if a company, for example, has already paid for the first year, but it will need carbon credits to the second and third year to neutralize the second and third year, it can hold the title, the carbon title, and retire it in the future. Or the company can even sell this carbon credit to the market. But one thing that the coalition has agreed is that any profit in reselling carbon credits purchased from forest countries will not be appropriated by the private buyer. It will be reverted back to the forest country. So one example, if this private buyer buys the title, paying $10 to Pará in Brazil, and it decides to keep in its assets and resell it to the market 2 years later, and it sells it to $15, this $5 profit goes back to Pará, does not stay with the company as a company a profit. So in a way that the coalition does not want to stimulate speculation. It really wants to channel funds to forest. And finally, the pathway 4 is the pathway that is related to the companies that are in the regulatory market. So in this case, because these companies will use these carbon credits, this title, to compensate, to offset their emissions based on the requirements, regulations that they follow, there is this what we called corresponding adjustment. The forest country cannot account for those results in their NDCs, and they would do a corresponding adjustment because the private buyer will use this in the international accountability of carbon. So those are these are the 4 pathways to transact. And why the LEAF Coalition and Emergent had chosen R3? So many carbon projects that you might have heard. One of the most known organizations that issue credits are Verra. So, but when these credits are issued under the project level, so many carbon projects, transactions have happened in the project level. ART was the first initiative and the first methodology that incorporated the jurisdictional level. And jurisdiction for ART means either the whole country or a specific area of a country with a minimum of 2.5 million hectares, or a subnational government or subnational region immediately below the national level. So in the case of Brazil, for example, the states. And ART has created a methodology that intends to address many of the concerns that are in the Varsel framework. One is additionality, mitigating leakage, ensuring that reversals or ensuring that there are processes to avoid or to guard reversals, avoid double counting, being embedded with strong social and environmental safeguards, include the UN Cancun safeguards as part of this assessment process, and ensuring transparency. So that's why ART, which is an independent company, an independent entity, it's also a non-profit entity, has been chosen to be the certification entity for this jurisdictional voluntary carbon market. And last, I brought some challenges about Brazil. So I've been working now in engaging with the Brazilian states in monitoring and meeting closely about how the states are being doing and their readiness process to meet all R3's requirements. But there are some challenges in the context of the REDD+ initiatives. First, we have seen that the results of deforestation in Brazil in the past years are I don't know what the best word to use, but are very frustrating. Deforestation has increased a lot, and the public policies related to forest protection has not been that efficient, particularly the signals coming from the federal level, but also many other challenges that the states have been having. The other one is comply with the JRED standards, the R3. So the states are preparing themselves to comply with all this process, but it requires that is also saying in number 3, not only the technical aspects of the standard, but also to agree into a fair and consistent benefit sharing mechanism. And this needs to engage the multiple key stakeholders in the territories, the multiple indigenous people, local communities. So in many of countries, we have this challenge, but particularly in Brazil, because of the size of the territory and the diversity of the stakeholders, this is a huge challenge. The other one is the legal framework. So to transact in the carbon market, the legal framework has to be improved or to provide security for all actors that are that will be part of these agreements. And lastly, one of the challenge I see clearly, particularly in Brazil, is the governance to organize the carbon markets. A lot of players in the carbon markets are coming to Brazil and also to the other states in the jurisdictional, but also many in the project level. And we have seen that there is no governance, there is no lead in this process of coordinating all these actions that are arising. So this is a challenge that we'll have to face in Brazil pretty soon, but it's also a common challenge to other countries that we've been working with, like as part of our role of an Emergent to facilitate this process. So this is what I brought for today, to reflect, to bring this reflection of what comes next in this agenda, and also to hear a little bit your reflections and your concerns or questions about this mechanism. That would also be interesting for my practice, and considering the experience all of you have in the agenda. That's it. That's what I brought for today. Thank you.
Thank you very much, Juliana.